Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody, let's take a look again on euro currency. So here overall performance is not very strong, so market still stands under pressure of the recent events, and non-farm payrolls report, comments from the Fed members concerning hawkish policy that Fed should keep up and keep going with it. And you can see that euro currency is gradually moving lower. So as we said in our weekly report, here in the nearest few sessions on this week, we need to understand whether euro keeps some chances to show this A, B, C, D type of action, or that will be just direct action to the downside. So currently the fundamental background, as you understand, stands not in favor of the upward reversal. And only maybe some weakness in the data that we could get could support euro and show some two-leg retracement. The first data we will get tomorrow. This will be Fed minutes protocol and PPI numbers. So this will be the first hint on the possible coming CPI on Thursday. On Friday we also will get the retail sales. So this 3 days, this will be rather significant statistics that we will get, and it really could make impact on overall situation. Currently you could see that trend right now is breaking to the downside, so we don't have yet the confirmed bearish trend on the daily chart, but as you can see, market right now stands below the MACD line, and if we'll close below it today, we will get the bearish trend on the daily chart. This is very important because if you remember, we said that we could consider some intraday support areas and could talk about the possible bullish action until euro currency holds bullish trend on the daily chart. If trend has breaking down and turns to the bearish, all other performance on intraday charts, it has really no significant meaning because it already will be with the confirmed bearish context on the daily. So that's why today it will be interesting and important to keep an eye on what will happen on the lower time frame. Particularly speaking, if you remember, we talked about this XOP and 618 level. So this is actually the last opportunity for the bulls to change the situation to the upside. And once market will hit the XOP, we intend to keep an eye on the possible bullish patterns that might be formed here, if of course any pattern will be formed at all. So for instance, if the market will form some kind of the butterfly completion with the XOP on the follow time frame chart, maybe it later will turn to some head and shoulders type of performance. This could lead us to consider taking the long position, mostly because, well, using these minor patterns led us to place very tight stop, and if even we are wrong on a possible direction, upside action will fizzle, this market will not show the upward continuation, well, potential risk will be very small. And it's also will be good chances to move stops to the break even when you have the patterns in place, because in this case it lets you to count on even minor bounce, some minor response, technical bounce up from the XOP, from the 618 support. And it also could let us to not only to place tight stop, but also to move stops to the break even in the first chance. So that's actually what we intend to keep an eye on nearest time on euro. Speaking about other currencies, guys, first of all, I would like to warn you about the Great British Pound, because you probably heard that Bank of England have increased the daily support to the bond market twice. So if initially it was announced £5 billion per day, so currently it's 10 billion pounds per day, and we do not see actually improving performance on the bond market. So it means that the Great Britain bond market actually already collapsed. So it's just artificial support by the money printing from the Bank of England that supported. In fact, this market has actually collapsed. So, and it tells us to expect nothing good on the nearest time on the economy in Great Britain, because money printing and 10 billion pounds per day for auctions to buy back the bonds yields. So it's promised nothing to the value of the Great British Pound, as you understand. And this is actually the open and evident turning to the quantitative easing program once again, since the economy can't hold the tightening and fighting of the inflation. So that's why on the Great British Pound, we do not see any reasons to change our long-term view of 95 below the parity, or even could go even lower depending on how fast they could stabilize the bond market. The same story we could say about the Japanese yen. So Japanese yen is coming to long-term target of the 150 level. I'm not sure that this definitely will be the limit to the upside. This big ABCD on the monthly chart here is 150. Because Japanese yen, if actually other countries more or less degree turning to the tightening, Japan hasn't stopped to printing money actually at all. So they actually don't apply any rate change, and Japan has really big debt to gross domestic product ratio. This debt is also very specific, is that it mostly belongs to government authorities. They are not trading publicly. So with the current performance, you can see that attempt to make the intervention a couple of weeks ago brings no results, so just minor effect. And Japanese yen will keep going higher, so there's no chances at all, and inflation in Japan will rise. So that's why I also stay aside from the investing in any Japan assets and buying this currency. So that's briefly what we have on Great British Pound and on Japanese yen.